Okay, hello everybody. Welcome to Korean Atlanta Mentorship here with another Velocity Banking review. Did you know that we have over 1,100 videos on this channel? 1,100 videos. And I pretty much make the same video over and over again, right? Clickbait, Velocity Banking review, put some clickbait. So today's clickbait is OMG, the bank doesn't want you to see this, right? So let's go ahead and get started. So, Velocity Banking, what is it? It's a debt payoff strategy. And you use something called a line of credit to help pay off your debt, right? Okay, so if you don't know who I am some random dude on the internet who paid off a mortgage in 2 years and 9 months. So if you take a look here, July 29, 2024, balance zero, amount zero, old news for me, and I paid off in 2 years and 9 months. So how do you calculate this? Well, the first payment is November 1st, 2021, right here. And so you do is subtract the maturity date by 30 years, and that's the first payment. And then if you want to see when the final payment was, you just take a look at this, July 20, 2024. I can't believe we're in 2025 already. That's freaking crazy. That's freaking crazy. Oh my goodness. Have I really paid off my mortgage for that long? Anyways, just want to show you this so I can flex a little bit and boost my ego. Yeah, so velocity banking, well, basically, it's a debt payoff strategy where you throw all of your money to debt. And the first step to doing it is creating a budget because your budget is your debt attack plan. Okay. And so what you do is you create your income, expenses, leftover savings, and then you create an expense breakdown where you list every single debt that you have, right? So we have 9 credit cards here, an auto loan, a mortgage, and then some your non-debt expenses. We just call them personal expenses or operating expenses if it's a business. Everything that's not a debt goes into this little bucket here, and our goal is to go ahead and eliminate the debt, right? And so what we're going to do is we're going to copy the income and the expenses, and I'm going to go ahead and copy and paste this, right? We'll do that. And then we're not going to save any money. So the difference between here and here initially, even though it looks the same, is that we're not going to save any money at all. So here we kind of think of the checking account as like the end goal for our money when we do banking as the average American. So you ever like hear people like, "Oh, you don't have $1,000 saved?" No, but here with velocity banking, the checking account is essentially the middleman, and then the line of credit is where we want all of our money to go. Okay, so if you want to see what this looks like in real life, I just don't save money. I have money come in, and then I treat the money in the checking account as like the middleman rather than a place to store money, and then I just take it out. Okay. All right. So after we've done our budget, we're just going to assume we have something called a line of credit. So it's a line of credit. It's basically a financial tool where you could borrow money, pay it back, and then use it over and over again. So this is my home equity line of credit for $373,500. Basically, I click a button on the bank's website and they'll dump up to $373,500 into my checking account. So as you can see right here, right? So let me actually do this. Okay. So this is my one of my banks that I use where I could go in and then I just click a button. So this one's up to 15,000. I have different lines of credit. I click a button and they can dump money into the checking account in an instant, right? And that's what we're going to use as quote as our main operating account, okay? So, if I take a look here, I have many lines of credit. 373,500 is just one of them. But I also have credit cards because credit cards are a line of credit because you can swipe, pay back, and then use it over and over again. But credit cards are a little bit inflexible. Like you can't use it to pay everything, right? A little bit harder to pay rent with a credit card, even though there are some options there, and along with the student loan and just your typical loans, very hard to pay with the credit card, right? And so with the line of credit, you can use it to pay anything. It's so cool. And I have tons and oodles and lines of credit as just one individual, 739,000, top 0.01%. Probably by next year, we'll have like a million or over a million, 1.5 million. That's what I'm assuming. I don't know for sure. But maybe will that actually happen. So here's the secret. Okay. Here's the secret to getting all the lines of credit that I got. I learned this um, when I think I was in like a real estate learning intensive on a Saturday, or I don't know if I actually went to that class directly or if I took it online, but there was somebody on a Saturday class as a teacher just saying banks don't lend money to people who need it, and I was like, "What?" And then I don't know what it is, but I remember being like kind of angry when I heard that. I was like, "What? They don't lend money?" I thought I was gonna be like Robert Kiyosaki and borrow all the money in the world and buy some real estate, and then somehow I could do that when I'm poor, you know? So I was just like, "What do you mean banks don't lend money to people who need it? I need money. That's why I'm here." And then eventually, it was probably one of those Mr. Miyagi wax on, wax off moments where you thought like the thing you were hearing was kind of useless, and then you're like, "No, no, no, no. This is the most amazing thing I've ever heard." Okay. So if you sum up that yeah, I have over $739,000 in lines of credit. And you could probably hear in my voice that this is not exciting to me at all, right? Same thing with paying off my mortgage in 2 years and 9 months. Like, oh yeah, whoop de doo, so boring, right? First world problems. Am I right, boys and girls? First world problems. Okay. All right. Well, I would call that rich people first world problems, right? So, yes, income, expenses, and then what we're going to do is not save money and we're going to increase something called our cash flow. So, if you're at this stage of life where you only have $37 left over, um Ooh, who's gonna give you a line of credit? Because you definitely need money at this point. The answer is pretty much nobody because banks don't lend money to people who need it. That's the secret to getting credit. If you understand that, then you'll get tons of credit. Like, how did I get over $739,000 in lines of credit? I always went to a bank when I did not need money. I didn't go to a bank when I needed money. That's it. I only went to a bank, or wait, did I say that right? Getting mixed up now. But I only went to a bank when I did not need money, and then I got a tons of lines of credit. See, everybody's like so focused on like, what is this bank looking for? Or what kind of credit score do you like? No, no, and that doesn't even care. You could have like an 800 credit score and still get denied because you need money, right? So, but we're going to assume we have a free and clear line of credit. And why do I always demonstrate this? Because the way that I want you to understand this is that you probably need to learn this in the beginning, um, before you ever take on debt, and then you'll never be here, right? I mean, I always use the analogy like, you being here is like being in a financial car crash, and you trying to get in a line of credit is like you trying to get insurance after you crashed the car and you didn't have insurance, right? Like, no car insurance company in their right mind is going to give you car insurance after you've crashed a car and you drove without insurance, right? You need to get the insurance before you drive the car. But a lot of people, when it comes to their finances, they don't want to do that. They're like, I'm good. And then they crash their car and it's like, holy balls. Like, this could have helped me. It's like, yeah, why don't you learn it when I asked you to? Because people have big egos. There's a saying that for some reason, a lot of people are like experts at like money, health, fitness. They're experts at everything. And our society, for some reason, does not teach like basic things for survival to the members of society. Like, you don't learn how to do taxes or like even the basics, like what's a 1040, 1065, S corp, LLC, like what is all of that? You know what I mean? Like, what uh and somehow everybody's an expert. That's why nobody really listens. So every time, like, I just kind of do these demonstrations to people, especially in real life. Internet's a little bit different because you're in your own safe space watching these videos, and like, I'm not right there, so you don't feel any pressure. But if I'm with you in real life, I know exactly what's going to happen. I'm going to demonstrate this to you. I'm going to demonstrate something like paying off 3 houses in like 10 years, and then you're just going to have a poker face. Now, I'm not talking about you specifically, I'm talking about you in general. Like, no emotion. People will just look at this 3 houses paid off in 10 years, and then they'll act like they didn't see anything, and they'll just like run away and move on. Uh, right? I mean, the worst part about me is that I'm not like, I don't try to convince anybody of anything, but sometimes like you kind of have to, you kind of have to if you really want to help people, you really have to be that annoying person who wants the best for other people. But me, because I don't want to deal with conflict, I you know, I just demonstrate it. I know it could probably like help people, but if you're not showing me like dedicated interest from the start, maybe because I have a quote cult leader personality, I don't want you in my little circle. Okay. Am I kidding or not? I don't know. It's traits of a psychopath, boys and girls. Okay. All right. So let's go ahead and assume we have a free and clear line of credit. Now, there's an actual real life case study that we did. 22 debts, $4 left over. Someone actually had a line of credit, but they treated it typically like another credit card, meaning that they had it, but they didn't have it free and clear. They had it to the limit, and that's how the bank wants you to treat a line of credit. So they just want to treat it as like another debt tool rather than as your quote main operating account. And so what we're going to do here is that we're going to treat our line of credit as our main operating account and dump all of our pay into it and take our expenses out and then rinse and repeat over and over again. So for me, it's a lot easier to demonstrate when we have a free and clear line of credit. Because if I go to that 22 debt live stream, I'm gonna be honest, like I have a little bit of anxiety. It's like this huge ball of yarn you gotta entangle. Where for me, it's a lot easier to demonstrate this way. But if you want to take a look at that live stream, 99 cents, right? 99 cents. That's all it is. Join the YouTube channel. And then I also have a $2,000 package and then a $22,000 package. And, I am the worst salesman ever. I think I'm a better buyer than I am a salesman. I think I've realized that because when someone gives me a objection, I've kind of realized that they're wanting me to um like untangle that objection, like resolve that objection. And my mindset is like, well, if you think this sucks, then go away, which I probably should stop doing. But um but boys and girls, that's the luxury you have when you pay off a mortgage in 2 years and 9 months. Like I'm not gonna lie. Okay, so let's go ahead and do the velocity banking thing. So, what's the next step? Well, basically, we have to figure out what debts we're moving into a line of credit. And the easiest way is by using something called the cash flow index. So, you take the balance of the loan or the debt divided by the monthly payment, and then it gives you a ranking system. And you want to start off with the low ranking numbers. The higher the number, what does that mean? It basically means that you don't get enough bang for your buck for paying off that debt. So here, in order to pay off that mortgage, I have to give someone $270,000 to only get $1,100 of cash flow back in my life. That's a no bueno. Okay. So what I want is maybe just give someone 35 grand to get $1,100 back in my life, which is what the cash flow index is about. It's just a ratio of the debt to the payment. And then if you do it this way, it makes your life a lot easier. I actually knew about this, but I didn't really start to use it until I tackled down that 22 debt scenario. I was like, whoa. Or maybe I used it before, but I didn't. No, there was another scenario someone sent me that was like all over the place. It wasn't 22 debts, it was like 10 debts. And then I was just like, all right, well, this is easy, cash flow index. And so what we're going to do is take these low ranking debts, which is not a coincidence, it's the credit cards, and then move them into the line of credit. So it's 5, 8, 15, 27, 37, 10, 35, 12. And then I'm going to sum them up. And then it's $149,000. So 149,000, that's 149,000. Okay. And then guess what happens here? Okay. This is the moment where I honestly think this is probably the most amazing part of velocity banking. And every time I present to somebody in person, I get no emotion from the person I'm presenting to, right? So guess what happens here? So these payments go to zero, right? The credit cards that we move, okay, they go to zero. And we literally went from $37 in savings to look what happens when we don't save money and we move some debt into the line of credit, right? And so if I saw something like this, I'd be like, whoa, that blows my mind. The moment I realize I'm not like other people is because when I realized that when I showed this to other people in real life, they just stand there and act like I don't want to say it wasn't impressive, but they just have no emotion. And I'm like blown away because it's like, how do you do that? Because if someone shows me this, it's like, whoa, like you're telling me that all I have to do is change the flow of money and I literally can go from this to this in an instant. This is like your Thanos snap moment, right? Like this, see, the problem is that if you just think about making more money, you're still going to end up here because you're financially inefficient. You're just going to take on more debt and then like, where'd my cash flow go? Here, because we're always using our money to tackle debt, our debt's going to disappear relatively quickly. Okay. So the final step is we're going to put our entire paycheck into that line basically as an overpayment. So if we get paid 8,500, we make that as a payment and it does two things. It satisfies the minimum payment because think about this. If you have $149,000 of debt, the payment is usually like only the interest. And so how do you calculate the interest? So it's just 149,000 times 0.08 divided by 12. And so the payment is $993. If I dump that entire 8,500 into that line of credit, this $993 payment is satisfied, right? And also you'll lower the interest because the interest is based on the average daily balance, right? So 8,500 here, we satisfy the payment, and then we take expenses out, and then we rinse and repeat over and over again. Okay, all right. So now we're going to do this here. H2 minus 4797.83. And then what we're going to do here is we're going to take the average daily balance, multiply it by the interest rate, and then divide by 12. That's how you calculate the interest for the month. And then wha-blam, alakazam. And so now we pay off our debt in about 35 months. And look how easy that is. Holy balls. That is so easy, right? And so you take a look here, just the debt went down, and the credit card debt that you were sweating about because you was $149,000. OMG, it's so much, right? Now was paid off in almost a little bit less than 3 years, right? So a little bit less than 3 years, 35. And so I'm just gonna do this right here. So 35 months, it's 149K. And then this is gonna be right here. Okay. And so now look at that. I mean, we were sweating balls, $37 a month, and now we're good. And here we have two more loans, which is the auto loan and the mortgage. And luckily, we got this calculator right here to help us determine what the current balance is. So 35 months, and then you see that, and then you just use the cash flow index again. And I'm going to move, this is the auto loan, into the line of credit. And we're going to go ahead and pay it off relatively easy. Bam, bam, plus 8759.86. Okay, we're good. And then I'm going to do 0 here at the auto loan payment. And then this 5,161.67 cents. And then I'm going to do this and now increase the cash flow, which is 5161.67. And then bam, still pays off only in 2 months, so it didn't really make that much of a difference. And then 37 months, yeah, auto loans paid off, right? Auto loans paid off. And so 149K, so that's 169K in total. And then now at this point, you decide, all right, do I want to invest, make money, or do I pay off the mortgage? And either one is perfectly fine, right? Either one is perfectly fine. But it's up to you, right? Because paying off the mortgage is honestly a safer bet, whereas investing in, let's say, taking on more debt is always a little bit more of a risk, in my opinion, right? And so, yeah, let's just go ahead and pay off the mortgage again. So now this is going to be like 37 months. And even though this is a 3% interest rate, and this is a very low payment, because the term is so long, this 3% interest rate annually means total of 50% interest when the final payment is made. So after 360 payments, we see that the total interest is 139,000 and the original balance was 270. Now, if this is a 6% loan, right? Take a look at this. 312,000. Okay, that's a little bit insane, folks, but that is what it is. All right, so now let me just do this. So we're at 37. And so now we're at $252,000 of debt still remaining. And it's very hard to screw up paying off the debt, except one way, right? You could even use a 30% credit card to pay this off. But I would say the only way that you could really screw up, which I've seen promoted on the internet many, many times, is to move the entire loan into a line of credit, right? Think about this. Like, remember this, what this cash flow index number means or represents is that if you pay off this debt, you get itty bitty cash flow, right? So if you're moving this entire loan into from a 3 to 8 and you're only getting itty bitty cash flow, right? The interest accrued is going to be more than if you just not done that. Okay. So luckily we have this velocity banking calculator here, and I can just go ahead and demonstrate it, right? I did this last time. And if you want to know where I got this calculator from, I got it from Renatus. So if you're interested in learning about Renatus, click the Google form link below. I get a commission off of every sale, and yada, yada, yada. What am I talking about? All right. So let me go ahead and just demonstrate this. So if I move this loan into a line of credit, you see that you pay $42,000 of interest and you pay it off in 4 years. Now it looks impressive. Okay. 4 years, $42,000 of interest. But if we just move just a small amount, we'll just say $9,000 into that line and then rinse and repeat over and over again, look, 14,000 of interest, much better, right? And you can do this with the 30% credit card, and alakazam, it still turns out better than moving the whole loan into an 8% line of credit. Okay. And you can even make an argument that, hey, maybe you do want to pay your loans with the credit card, because the best credit decision isn't the best financial decision. Right. So what I mean by that is basically sometimes it's okay to pay a little bit of interest if that means that the bank will give you more money to use. Right. So obviously I don't want to pay them like 150% interest, but a dollar here, there, I mean, it's perfectly fine, you know? And the reason I say that is because sometimes the bank will just automatically up your credit limit like they did with me. This used to be a $10,000 credit card. And then one day I woke up and it was 17,500. Okay. Now I'm a little bit active when it comes to, or proactive when it comes to getting lines, but it's nice when the bank just does it for you, and you don't have to do it yourself. 17,500. And that's because I swiped a lot setting up an Airbnb. $5,000 in July. I probably need to update those screenshots, but yes. Okay, so let me go back here. So 9,000, and this is going to be 8%. And then the 3.6 years, and I'm going to do this right here. All right, so now 37 divided by 12 plus 3.6 and 6.68 years debt free. It's funny. I'm just like casually talking about 3.6 years paid off mortgage like it's almost nothing. Oh, just 3.6 years. Oh yeah, paid off a mortgage in 2 years and 9 months. My reality is so warped from the average person that this is why I can't honestly like talk to most people anymore, because I know that they're working hard and they're probably struggling, and here I am just taking naps and playing my Nintendo Switch 2. And I've actually been playing Zelda for the Nintendo 64 Ocarina of Time on my Nintendo Switch. I've gotten into the second dungeon as Adult Link, the Fire Temple. And so I'm almost done with that one. It's like, this is probably not the reality of your average person. But yes, mortgage free 2 years and 9 months, and then now we're debt free in 6.68 years. So I always say this, like, you ever see those velocity banking channels where you talk about you could be mortgage free to 7 to 10 years, and like, what are you talking about? Do it under 4, right? Like, do it under 4. Okay. All right. Well, that's it for today, folks. Korean Lanta Mentorship. Have a great day, and I'll see you on the next video.